Welcome to the Deep Dive, the place where we take complex information, stack up your sources, and really unearth those surprising facts and vital insights. I'm John.
And I'm Wendy. We're staff at WeWire, bringing you the weekly Stay Wired recap.
And what a week it's been.
Definitely. Today, we're taking a deep dive into, well, the fascinating and really rapidly evolving world of e-commerce in Africa, just to give you a sense of scale.
Yeah.
As of 2023, there were approximately 388 million online shoppers active across the continent.
Wow. 388 million.
Exactly. And the market, it's projected to reach, get this, USD 1,017.0 billion by 2033.
$1 trillion.
Pretty much. Growing at a compound annual growth rate, a CAGR of 13.8% from 2025 to 2033. That's according to the IMARS group.
That is, truly explosive growth. And you see these major platforms like Jumia People, often called the Amazon of Africa, alongside Takealot and Congo, really dominating the market.
Yeah, they attract millions of monthly visits, offer a huge range of products, electronics, fashion, everything.
So, our mission for you today is really to unpack why, despite this incredible expansion, local products in Africa seem to face these unique hurdles online.
Exactly. We've compiled insights from the weekly Stay Wired report, 19.pdf, and other market intelligence. We want to help you get a clearer picture of what's happening on the ground.
Okay.
Then later, as part of the Stay Wired recap, we'll quickly sweep through some of the week's biggest market movers, give you an update on currency performance, touch on commodities.
And maybe even highlight some active stocks for investment ideas.
That's the plan.
All right. So, Wendy, we know the market's booming, but our report points out something interesting. Local products like textiles, food, they often carry surprisingly high price tags online. What's fundamentally behind that?
Well, if we connect this to the bigger picture, it seems the cost of doing business in Africa is just significantly higher.
Higher how?
We're talking maybe 20–40% more than in other developing regions.
20 to 40%, that's huge.
It is. And it's driven by things like, regulatory costs, insecure property rights, policy uncertainties. Africa Renewal noted this.
So it's not just about the final product itself, but the whole environment, the whole supply chain that inflates those costs.
Precisely. That 20–40% higher cost isn't just some abstract number. It means a local artisan's handmade item or maybe a farmer's produce, it could be priced out of the market before it even reaches a customer's screen. It makes it incredibly hard for them to compete with, say, cheaper mass-produced imports. The real insight here is how these foundational economic challenges translate directly into a competitive disadvantage, especially for homegrown products online.
Okay.
Take textiles, for example. Even though countries like Egypt and Tanzania produce a lot of raw cotton,
Right.
the lack of local processing facilities means manufacturers often have to import processed materials, and that's at elevated costs. Mordor Intelligence pointed this out.
That's a really powerful example. And what about infrastructure? Does that add to this cost burden?
Oh, absolutely. That's another significant factor. Weak infrastructure, like, poor transportation networks. That just piles on more costs for moving goods, from production to market. Economists highlighted this point.
Right.
And in agriculture, you see low productivity sometimes, maybe from poor soil quality, limited fertilizer use, inadequate irrigation that leads to lower yields, and so higher per unit costs. It's really a systemic issue. It impacts everything.
Okay, so it's one thing to actually make a product, another to sell it. But then a whole other challenge to sell it online. Our sources indicate local sellers really struggle with online discoverability. How does that play out for someone just trying to get their products seen?
Yeah, that really begs the question. How do you get noticed in what's becoming a very crowded digital marketplace? It's not just a lack of expertise sometimes. It's like a digital visibility chasm.
A chasm.
Well, many small business owners, they simply lack the expertise in digital marketing. Things like SEO, social media strategies, which Digital Reach Consult notes are frankly crucial for online visibility.
So it's like having a great stall but hidden away.
Exactly. Imagine that vibrant local market, but online without good SEO, it's like their stall is hidden down some alleyway nobody knows exists.
And imagine budget plays a huge role here too. Small businesses versus bigger players.
Absolutely. Buzzboard.ai points this out clearly. These businesses often just can't invest in professional marketing or, paid ad campaigns. So they're forced to rely on less effective organic reach. And this digital illiteracy, it isn't just about missing sales today. It fundamentally stifles brand building and consumer trust for local businesses in what's now a globally connected marketplace.
And what about the basic access for consumers to even find these businesses online in the first place?
That's another critical point, yeah. Unreliable internet connection sometimes, high data costs. These can hinder consistent online engagement for both sellers and consumers. Quora had some discussion on this.
Right.
Plus, think about the continent's incredible linguistic and cultural diversity. Over 2,000 spoken languages. It means you really need localized marketing strategies. And Gordot Yukunbaum points out that these are incredibly resource intensive. So it's not just about being online, it's about being seen effectively
Yeah.
and affordably.
Okay, so let's say you've made a great product. You've somehow found a way to get it seen online, but then comes the actual transaction, paying for it. Our sources indicate payment processing is this huge barrier. Could you maybe explain the dynamics there, especially for someone who might just assume mobile money solved everything?
Yeah, this is truly a critical hurdle. Trade.gov reports that only about 2%, just 2% of the population owns credit cards.
Only 2%.
Yeah. So traditional online payment methods, largely inaccessible for most people. That's a massive roadblock for any e-commerce platform.
So what do people use?
Well, cash on delivery is popular in many African markets. Statista shows this. But that brings its own set of logistical complexities, and risks for sellers, like handling returns or maybe even lost stock.
But what about mobile money? Things like M-Pesa. We hear so much about how transformative that's been, especially in places like Kenya.
And it has been. Mobile money services have revolutionized payments. A significant portion of the population uses these platforms daily.
So why the barrier then?
Well, what's truly striking here is that while they are widely adopted, actually integrating these systems seamlessly into e-commerce platforms, that requires technical expertise and resources, which McKinsey notes many local sellers simply lack.
Ah, okay.
So it's not just about mobile money being available, it's about making it effortlessly accessible, integrated, within the online shopping experience itself.
Got it. Okay, finally, let's talk about getting the product physically from the seller to the buyer. Fulfillment and logistics. Our sources highlight these as formidable challenges. What really stands out to you in this area?
Well, zooming out for a second, this fundamentally impacts the entire customer experience, doesn't it? You've got inadequate road conditions in places, unreliable postal services sometimes, and even the absence of standardized addressing systems. The World Economic Forum points this out. It severely complicates the whole delivery process.
Yeah, I mean, imagine trying to deliver a package when many addresses aren't even clearly marked or standardized.
Exactly. And that must add enormous cost.
Future costs, I bet.
It does. The cost is, well, astounding, actually. Logistics costs in Africa can add up to 320%. 320% to manufacturing costs.
Whoa. Compared to what elsewhere?
Compared to just maybe 90% in Europe, that's a stark contrast highlighted by the NTU SBF Center for African Studies.
That is a massive difference. Really underscores these systemic hurdles.
Absolutely. And then last mile delivery, especially to rural or remote areas, that's particularly difficult. Again, poor transportation infrastructure, as InScope Logistics points out.
Right.
And then you add the varying regulations across Africa's 54 countries. Suddenly, cross-border e-commerce becomes incredibly complex for sellers who might want to expand regionally.
Okay, so despite all these challenges, and they are significant, the report is pretty clear. African e-commerce is not failing its local brands. It sounds more like it's navigating a really complex landscape. What does that mean for you, the listener? And what are the opportunities here for local brands?
Yeah, I think that's the key takeaway. What's truly compelling here is that platforms like Jumia and Takealot, they have successfully enabled many local sellers to reach broader audiences.
So there are success stories.
Definitely. It shows the immense potential for domestic brands to actually thrive online. Both the NTU SBF Center for African Studies and She Leads Africa note this success. So it's really not a question of if local brands can succeed online, but more how. How do we scale these successes and tackle these bigger systemic issues?
That's a really important distinction. So what does this all mean then for supporting local brands? What kind of solutions are our sources pointing towards?
Well, the sources seem to suggest several key areas. First, providing targeted digital skills training. Really enhance that online visibility for small businesses. Second, significant investment in infrastructure to reduce those crippling logistics costs.
Makes sense.
Third, better integration of local payment methods like mobile money to streamline transactions for everyone involved.
Right, make it seamless.
Exactly. And finally, implementing supportive policies, something like a proposed Buy African Act, perhaps, to actively promote domestic products. Africa.com suggested something along those lines. It's definitely a multifaceted approach, but, each piece seems vital to truly unlock that potential.
That's a powerful and, yeah, very nuanced look at Africa's e-commerce landscape. You can really see both the significant hurdles, but also that incredible opportunity. Okay, shifting gears now. Let's quickly bring you up to speed on the broader economic currents, the ones shaping global markets and what it might mean for your investments this week. We'll be looking at performance figures week to date, that's WTD, and year to date, YTD, for that broader picture. Let's unpack this week's global market movers first, drawing from Wire Times.
Okay. So this week saw some interesting dynamics globally. Russia's July inflation expectations actually held steady at 13%. Now, that figure, it actually supports the case for a central bank rate cut there, so maybe a potential shift in their monetary policy.
Interesting.
Meanwhile, China looks like it's trying to lower the threshold for its luxury car consumption tax. That seems like a clear move aimed at boosting domestic consumption, in that specific high-end segment.
And what about on the trade front? Anything notable?
Well, Swiss exports fell in Q2. Apparently, what they call tariff front-running reversed. Essentially, businesses bought stuff ahead of potential tariff changes, which kind of distorted the numbers for a bit.
Ah, okay.
And we also saw some significant political action in the U.S. The Senate passed a Trump-backed bill slashing foreign aid and public broadcasting funding. That could have pretty wide-ranging implications down the line.
Yeah, definitely one to watch. What truly captivated me in the report, though, was China's youth jobless rate. It actually dropped to a 12-month low in June.
Oh, really? That's positive.
Yeah, seems like a positive sign for their economy. Even as, on the other hand, Japan's exports took a hit, apparently from U.S. tariffs impacting automobiles.
Right.
And then there's the ongoing discussion about oil. It saw a mild weekly loss overall, despite a bit of a rebound on Friday. This was influenced by, EU sanctions on Russia's oil sector hitting supply, but also geopolitical events like those drone attacks in Iraqi Kurdistan, reminding everyone about supply vulnerabilities.
Always something with oil.
Always. And gold also saw a slight weekly decline. That's despite a weaker U.S. dollar and, ongoing geopolitical risks. Seems strong U.S. economic data made safer assets a bit less attractive this week.
Okay, so shifting our focus now to Africa this week, we saw some key economic indicators moving. Nigeria's inflation, for instance, fell for the third consecutive month in June.
That's good news for Nigeria.
Yeah, that's a significant positive trend there. And on maybe a more cultural note, the Paris Saint-Germain Legends, the football team, they're visiting Rwanda.
Oh, interesting. Why is that significant?
Well, it's not just a celebrity visit. It seems like a strategic move to boost Rwanda's tourism and its national brand image. It kind of reflects that growing investment in soft power we're seeing across parts of the continent.
Gotcha. Any other notable moves on the continent this week?
Yes, a few things. South Africa's Eskom, their national power utility, announced targets for mainly clean energy sources by 2040. That's a major shift towards sustainability for them. The IMF commented on Egypt, saying it has kind of mixed reform progress. They cited state dominance of the economy as a persistent challenge there.
Yeah.
Senegal raised about $644 million in an oversubscribed domestic bond offering. That shows pretty strong investor confidence, at least domestically.
Good for Senegal.
And Zimbabwe's Kuvimba, a mining company, revised its platinum mine plan as prices rebound. Uganda's foreign reserves rose by a third, reversing a previous slide. And finally, Ghana's central bank convened an emergency monetary policy committee meeting, which signals there might be some immediate economic concerns they're addressing.
Okay, a lot happening across the continent. Let's talk currencies now. For our African FX corner, what's been notable this week?
Well, this week, the Ghanaian cedi, that's USD-GHS, really kind of stole the show. It held steady week to date, so no change there. But its strength since the start of 2025 is quite remarkable.
Oh, strong.
It's appreciated an impressive 21.80% year to date. That makes it one of the strongest African currencies right now.
Wow.
The Kenyan shilling USD key also saw a mild appreciation, about 0.23% week to date.
Okay.
In contrast, the Nigerian naira USD NGN, it weakened slightly by 0.13% WTD. That sort of signals continued depreciation pressure there.
Right.
The South African rand, USDZR, also weakened by 0.53% WTD, although it's still up over 5% year to date.
Hmm.
And the West African CFA franc, USDXOF, showed the most significant week-to-date depreciation, down 1.25%. Though, like the rand, it's still up overall for the year, about 6.14% YTD.
Okay, and what about the major global currency markets? Any big moves there?
Globally, the British pound, GBP/USD, it fell by 1.19% week to date. That's its second straight weekly loss.
Okay.
The Canadian dollar, KAUSD, declined 0.71% WTD. The Japanese yen, JPY/USD, weakened quite sharply, down 1.58% WTD, and it's now actually negative year to date.
Oof.
Yeah. And the Chinese yuan, USD/CNY, depreciated by 0.12% WTD. It remains one of the weakest major currencies this year, kind of reflecting those ongoing economic adjustments in China.
All right. Finally, let's briefly look at some of the week's most active stocks, maybe some investment ideas.
Sure. Our report highlights several. NVIDIA Corporation, NVDA, trading around $164.92, still has a strong buy rating in technology, probably driven by that continued strong demand in AI.
Makes sense.
NIO Inc., the EV maker NIO, at $3.90, rated buy and consumer discretionary, reflects maybe a more cautious sentiment in fintech right now. Lucid Group, LCID, another EV name, at $2.29, also rated hold and consumer discretionary. Again, maybe pointing to sort of tempered expectations in the EV startup space. American Airlines, AAL, at $12.22. That's a buy in industrials, likely benefiting from summer travel trends. Apple Inc., AAPL, around $207.22, still a buy in technology. Always a consistent mover, Apple.
Sure.
And Tesla, TSLA, at $346.46, rated hold in consumer discretionary, still showing ongoing volatility there. Just a reminder for everyone listening, this information is purely for informational purposes. It's not financial advice.
Absolutely. Always do your own research or, consult a qualified financial advisor.
So wrapping it all up,
Right.
what does this all mean? We've seen how Africa's e-commerce is this landscape of really incredible potential, right? But it's one where local brands face these significant, very interconnected challenges.
Yeah, from high production costs stemming from those systemic economic factors you mentioned.
Right, to the digital visibility hurdles, those complex payment processing issues, and those, well, formidable logistical labyrinths.
And yet, as you said, it's clearly not a story of failure. It's really one of navigation and, frankly, immense opportunity still.
Exactly. Investing in digital skills and infrastructure, integrating those local payment solutions better, and implementing supportive policies like that potential Buy African Act, these could truly unlock the potential for homegrown businesses.
And hopefully you've also gained a crucial snapshot from our recap of this week's key market movers and investment insights, helping you stay wired into both the global and African economies.
Yeah, and this really prompts a final thought for you to consider. Beyond the solutions we discussed today, how might some of the emerging technologies think about things like drone delivery, maybe blockchain for supply chains, or even novel public-private partnerships? How might those specifically help alleviate these barriers for local businesses and maybe transform Africa's e-commerce landscape even further in the coming years? Something to think about.
Definitely something to think about. Thank you for joining us on this deep dive. You've been with John Wendy,
And Wendy.
staff at WeWire, presenting your weekly Stay Wired recap. We'll be back with another deep dive next week.
Stay Wired Weekly Recap was produced by WeWire,
a B2B company, bridging the banking gap between emerging markets and the world.
Tune in same time next week for the Stay Wired Weekly Recap.